There we go. People get into this. Yes, I know I'm live. Thank you. Okay, so I'm going to do one of these. I'm going to take this off. Why is this doing not the thing that I want it to do? There we go, transition. Guys, forgive me as I try and get this thing set up, ready to go. Over on YouTube. No. What is up, market participants? Welcome to the Russell Journal. My name is Roll, and this is my journal entry for today, October, what is this, the 6th? October 6th. It's Thursday, October 6th, 2022, all day long. Today we have some very interesting stuff happening. We got the jobs data out this morning. Unemployment numbers came in higher than expected. And this is really created a real weird thing in the market right now. Right now, right now, Wall Street wants you to lose your job. Okay. Right now, that is what they want. They want you to lose your job. And the thing is if you lose your job and there's enough economic pain, then the Fed will pivot. They will get lower interest rates and they can make the stock market go back up. Now, there's a little bit of this that is like you lose your job, you struggle for a while, you stop spending money, the stock market turns around, starts going back up, then you get another job, right? So, but really they don't care how much pain you go through during that whole process, as long as the Fed pivots and the stock market starts going back up, okay? So there's a bit of this that's really, really messed up. So coming in today, we had about 219,000 new unemployment claims. This is up from last week, which is about 198,000 unemployment claims. And it was above expectations, which was 203 expected. That they were expecting 203 to 209,000 unemployment claims is what they were expecting, and it came in above. Okay, now if you're in the market here and you're hoping for a Fed pivot, there's two things about that. That is not enough of a rise in the unemployment number, the new claims, right, for the Fed to pivot. That's ridiculously low. It's still low. It's still at record lows. And it doesn't have to keep going up either, right? You know, last time it was like the lowest unemployment reading ever. So now we're here. So what we'll be really looking at now going forward into tomorrow. Oh, by the way, real quick, the continuing jobless claims came in at 1.36 million. And last week it was 1.35 million. So you're really looking at an unemployment number that is not, it's like 10,000 more. It's really not a lot of jobs that were lost. It's not out of normal. It's definitely, hell, it's not even out of season, right? Like summer jobs end, right? People lose their jobs. I remember when I was in Vegas, I worked in a pool, and this time of year, guess what? We all got laid off. We went on unemployment. That does not show a weakening economy, okay? Which is really kind of the crux of this thing. The question is right now, if you're the Fed, the question is really not what's the stock market doing, not what the Bank of England is doing. The question is the American economy strong enough to afford higher interest rates? I would say yes. Do I think that there's going to be a crash? Absolutely. And it will probably be stupid. It really will. Like somebody will be underwater on some dumb thing like corn or like rubber or something really stupid, some commodity they have too much of because they weren't sure. It may even just be retail inventories, right? So and all of a sudden they'll dump those onto the market and it'll be a deflationary crash, right? And the thing that's funny is Kathy Wood will seem kind of right, and so will a bunch of other people that we had a deflationary crash, but it's not really going to even be a deflationary recession. Like as soon as those inventories are liquidated, then it'll be over, right? We're back to normal, right? Plus, all that deflation is what you need to beat inflation. So the idea that like this is somehow going to be this massive end of the world crash, the world is ending, everybody's right. A lot of this is stuff that just constantly keeps getting propagated by the media, and we're not even actually seeing it happen, right? The stock market hasn't stopped being the stock market. Trading hasn't stopped being trading. The fact that like markets aren't flat right now, like really flat, and we'll go into the charts and show the fact that they are up and they're down and they're up and they're down. The fact that they're doing that shows that we're actually okay. We are healthy right now. Okay. Now I'm sorry if you wanted to hear the doom and gloom and stuff like that. Things are fine, right? It's not great. There's a lot of problems to work through, but the fact that the markets can be bumping around like this tells you that there's plenty of money to move the market. If I want to short the market, it costs money. If I want to go long on the market, I got to have money. So this whole like sort of idea that like all of a sudden things are so bad, if it's so bad, how come you have money to move arbitrary stock indexes around? How is that? Oh, you have enough money to do that? Oh, well then there's obviously enough money. And you want to know what's even worse is if the more it yo-yos around, the more the Fed's going to be like, they've got plenty of money to jerk the stock market around, so we can keep raising. So if you want a Fed pivot, flatten it out, stop trading. Like that's the only thing. Second thing about it, if you're really worried about a recession and an inflation-driven recession, the best thing you can do is just stop spending money. Like you buy food, you buy gasoline, you pay your rent, and that's it. Like stop taking trips. When you are broke, like you have two options too, as far as you're concerned. Either A, the Fed is going to run you in so you can't spend the money and go do the things, or you decide to like hold back and stop doing the things. Like just park yourself. It's only maybe like a year, 12 months. You don't get to go cross country. It's only you just whatever, like you just survived it in a pandemic. You can survive it again. It's not even, and it won't even be that bad. Like at the very worst, instead of going somewhere, just do the whole staycation thing, right? So if you really want to like not see the trouble of the Fed, talk to your friends and be like, yeah, what we need to do is stop spending money. Because guess that's what the Fed is trying to do. They're trying to raise the interest rate so you stop spending money, right? But the government keeps spending it. We keep spending it. My parents keep spending it, right? Park yourself, man. Like that's what you got to do. Anyway, going into tomorrow. Tomorrow we have the non-farm payroll report, okay? This is a big deal. This is also going to give us the unemployment number for, I believe, September. We are getting September's unemployment number, and it's probably going to be pretty low, okay? The whole Fed pivot thing is probably going to be, the bulls are going to get disappointed, okay? That's what's going to happen. They think that like the September number is going to come in good enough that the unemployment rate is going to come in good enough that the Fed is going to pivot. Last week, unemployment was the new claims was 198,000. Okay. That was the new claims. It was the record for lowest unemployment ever. So if the bulls are hoping that tomorrow you get a case for the Fed to pivot, there's no way. Like There's literally no way. There was no point in September where we saw unemployment above anything else. And this is where the warning comes from. When the bulls realize there is more pain to go through and the Fed is at liberty to keep raising those rates, the bottom is going to fall out of this market. And that's where you get the crash. But a lot of guys are hoping, right? Because they want to balance their portfolios or do this or do that. Or maybe they're just addicted to free money or cheap money, okay? So whatever your narrative for that is really doesn't matter, okay? We're going to go ahead and jump over. We're going to jump into the charts and sort of look at things. Okay, as you can see behind me, this is a list of the different market sectors for the SPY. It has a few other things in it. I think UP is the dollar is in here and so stuff. You can see just a nice sea of red right here. A little bit of white and green on the screen, right? You can see things just taking an absolute bludgeoning. Well, it's not a bludgeoning. To be honest with you, it's not really down that much, especially given how much, you're down like 2% from where you were up at. And you were up almost like 8% in 2 days. So it's ridiculous, right? So we can't be too upset about the market, what it's doing. Let's go ahead, though, and look into the market for today. And we will go ahead and start with this bad baby, the VIX. And I'm gonna point out a couple things, because yesterday we talked about the keys of dating. We talked about the trend. Okay, one of them I want to point out as far as like trends go: lower high, or higher low, higher low. Oh, there you go. Right, lower low. Okay, so the thing is we see right now there is a shifting trend, okay? You don't have it confirmed. And what's really happened in the indexes over the last, over today, was you can see what happened is it fought a battle right here, basically at the 18-day average, okay? Right now, the bears are winning. The bulls can snap it back, okay? Something else I want you to look at on the 1 hour is I'm going to wheel this out so you can see the slow stochastic. Okay, on the slow stochastic, you can see here on the 1 hour, you are definitely oversold here. You're getting into oversold. You're below the 18-day moving average. You did lose it. So your momentum, your trend is starting to go down. It's really weak right now, just so you know. This is a very weak change in trend. There is a lot of support in and around here. And so the thing is it gets really scary, right? Your trades here are really, you either have to have a lot of conviction in your trades because the technicals do not support being long or short, okay? What you do have is you have the bias in your favor, you have momentum in your favor, but you're coming into oversold. And let's go ahead and turn on our Bollinger Bands. And based on the 1 hour chart, especially if you're day trading, you're getting real close to that pretty little bottom Bollinger Band. Okay. They have narrowed them in. So they are tightening up the range at which this can trade at. Okay. So you've really, it's going to have a lot of defense here and here. Okay. What I want you to see as far as like what we have as far as resistance, and you will see this pretty clearly from today, is I'm going to turn on the 200E. And you can see, now this is the 1 hour chart, okay? We'll go to the daily and go through our normal practice on the daily. You can see that we are trending still below the 200 EMA on the 1 hour. And I'll show you, this will freak you out, okay? On a minute, I'll turn these other ones off so it's not so noisy. Bollinger Bands MA, okay? Okay, see this? This is the 21 EMA, and this is the 200. You just rejected there, right? So we're probably going for another leg lower. And this is off of the 30-minute chart right here, okay? So based on the 30-minute and the 1 hour, I would say the likelihood of going down further, having more downside, is definitely there. At the moment, though, these trades are really risky. If this 21 for any reason pops over, if they gap this up in the morning and drag this 21 over, that you could go for a wild ride up, right? This would be the 21 crossing the 200 would be a huge buy signal. The only other one that would be more is if the 50 was coming back up over the 200 on some of these other time frames, okay? So, but like I said, you can see here, you fought this battle all along the 200, could not get over it, but it tried, right? And I'm going to tell you something. It very rarely does this and not go over, okay? That is something we want to pay attention to. So it's touch or go. And I would honestly say until you get clear support above this, or like you had this here, right, above the 200, and it couldn't stay up there. Try it again, couldn't stay up there, right? But it's trying to break down under it, and it can't break down, keeps bouncing, right? So the thing is like, this is really, really a no man's land sort of situation, unless I'm scalping it. I'm at about $20 today scalping it. That's about all I did. I am not there. There's no trend here, right? And so if you're trading this, it's really hard to trade and it's really touchy. And if you're not absolutely the most patient with your entries and super fast to take money off the table, you can blow your count up really hard right here. So this line, until we either get a clear move over it or a clear rejection underneath it, really hard to trade, really hard. Okay. Okay. For the EMAs. Now let's go ahead and go through our regular list. Okay. On the daily chart, on the VIX, we'll go to the daily. As of right now, the VIX is trending lower. If you read yesterday's report or if you watched yesterday's show, you will hear me talk and say right here, right? Okay, so here so far is this pattern of higher highs and higher lows. Coming into this, you have a change in direction, okay? You have this high here, and now you have this high here, okay? So it is now a pattern of lower highs mixed still kind of with higher lows. And if you stay in this channel, it will just keep making lower lows and lower highs. And this is what the bulls need to see. They need to drive the stock market bulls need to see the VIX driving down. Okay. Volatility, that will be volatility trying to leave the market. Okay. One of the things that you can keep an eye on from the economic standpoint is how much the Fed is unwinding its balance sheet. And you can check them out at federalreserve.gov or fed.gov, I believe, and keep a report. There's a section in there that will show you how much they are unwinding. Now, more they typically unwind, the more volatility you tend to see. And if you see this, these spikes actually tend to line up pretty well with volatility. I would recommend checking out Steve Van Meter's channel. I'm not. He tracks all of that and has it. So if you check out Steve Van Meter, he does have that data. I'm not going to give a disclaimer about him. He's hardcore bond guy, so just beware of that. If you're not into bonds or don't understand bonds, a lot of what he's going to say is over your head, but he is a good source of data. I get no affiliate mark from him. I keep asking him to like and subscribe to my channel though, and he doesn't. So here we go. Okay. Our trend is technically up. Okay. But short term, you have lower highs, lower lows until you don't. Now we go through our other stuff. our MA. We need our moving average, 18-day moving average. Okay, again, this is stuff that we talked about yesterday. Trend is up, bias is up, momentum is down, right? Bias trumps right now is trumping momentum. So, and this is something I said yesterday. I said, the fact that we're not getting a bounce here just yet is weird. And we finally got it. Like we should have come into a bounce right there. That candle should have been green. Absolutely makes sense. Okay. And then we go and we're going to look for kind of our price targets, our Bollinger Bands. Now I'm going to say, what is this? 33.77. So this 33.77 is where the bulls will be targeting. That will be their first move. They get up there and that's where they'll come out. Okay. The VIX bulls. If you're bullish on the VIX, you're usually bearish on the indexes. Okay. If you do break below this lower Bollinger Band is what they will target, and you can't see it, but I will tell you 22.99. So about 23 on the VIX is where they will target if you get below there. Okay. It's been a pretty good little pullback for the VIX, and it'll be interesting to see if it can continue forward. Okay. Going back into DXY. Hey, DXY, getting up there, huh? All right. Now, I thought this whole thing was weird, DXY. It didn't make a lot of sense. It doesn't move exactly with the other indices. And I'll show you when we get to SPY where the VIX and SPY sort of mash up. This one's not. We got up here. I was really sort of surprised. Rejected the top Bollinger Band, started pulling back. Had a lot of timing stuff that worked out really well with that. China dumping money and other stuff. So what you're really seeing right here is, again, fall through, broke through the 18 right as you lost the upward momentum here. And now you're catching it back, right? And a lot of it is because, again, a lot of this points to the fact that the non-farm payrolls tomorrow are not going to be bad. They're going to be good, and the Fed is going to continue to tighten. The idea you're not going to get another 75 basis point rate hike, I think the Fed is scrambling to get those rate hikes up and to get it up as high as they can, so that when they do start to pull it back, they don't actually have to just drop it. You know, if you remember when COVID happened, I mean, they just like nothing. Like it was one of the biggest drops, fastest drops in history for monetary policy and for stuff. So this is definitely signaling to us right now that the Fed is going to continue to tighten. Okay. Now, and it falls in line with my overall thesis. I do think the Fed will begin to back off the QE. And I said it back in August. I said there's 2 more rate hikes at least. So I'm going to stick with that. I'm subject to be wrong and I'm subject to change, but in November, I am fully counting on there being some tightening. What will change between here and there, okay, is next week we have the beginning of earnings, okay? So we will go over earnings on Sunday. So if you are a fan or if you're interested in knowing about what's going to happen with earnings, what earnings are coming up, go ahead and make sure you like and subscribe to this channel, like the video, subscribe, because Sunday I will do an earnings video going into next week as far as like trade planning goes for next week. Okay. Earnings is going to create some really great opportunities for us, especially once we're through these non-farm payroll stuff. Okay. Now, let's go back in and finish this bad baby up. Okay. So let's go over it really quick because this is real simple. Trend up, momentum down, bias starting to get back up there, right? Broke the 18, bias is starting to be to the upside. Okay, so we're starting to think of a long bias on the old dollar, right? So we've got momentum down, trend is mostly up, or no, I guess you could say the trend is down. You got lower highs, lower lows, but the bias is up, or the bias is long. Okay, so you got immediately downtrend, bias long, momentum down, right? As far as this goes, unless you got to buy the dollar, I would probably stay out of it. I would also expect it to keep going up, though, to be honest with you. Okay. Going back in SPY, All right. Again, our trend right here, your trend here has been down, but here you're starting to turn the trend. This high is above this high. So on the very bottom side of this, you're really looking at these two highs, and you have higher highs, and this point you still have a lower low. What you need this to do is set in here and put in a higher low and break above that 18. That is what you need. I don't know that that's what you're going to get. Okay. It can do it, and it can do it all night long. Okay. But again, we saw it try and do that back here. Fell. Right. So it's going to create some interesting plays, especially given that you're at the 18, your momentum is up here. And if you turn back down, you really got to get 4 shorts to cover on that. You got to get back down here to this lower end, which is a pretty good move if you're looking at it. You're looking all the way down there to 3. So this, in the next couple of days, if the short side is going to play out, it needs to break all the way down to that 351 and really just go straight down there to make the shorts cover. If it sells off slowly, right? If it keeps fighting this battle all the way down, the bulls will lose their advantage. If they let it sell down and they let momentum turn down into oversold, right? If they let the momentum turn down into oversold and they let it go down slowly, where the bears don't have to cover, right? The bears want to cover on the lower Bollinger Band, okay? This is where they'll target, okay? So if the bulls let it just go down there and they do it quickly, the bears will be forced to cover and they'll get a bounce back in the upward direction, okay? That's really something. But if they bring it down slowly and they let this momentum embed down here, the bulls will have one hell of a time getting it to move back in the other direction. Now, I'm not saying they can't. I'm not saying they won't. But if they let this thing just grind down slowly and try and play this defense game the whole time, it is going to cause some real problems for the bull side. So the bulls either need to wake up tomorrow and explode through for no reason whatsoever, because they're not going to win the Fed pivot thing. They're just like, oh, you know what? Stocks go up. If they don't do this, they're going to have a hard time. So now there are 2 things that I can say about it. You can have it come down, hit oversold the first day, okay, and not be at the lower Bollinger Band. And if the bulls buy it off of the oversold reading to the upside, it's theirs to drive, right? It is theirs. They have to drive it up, okay? So they're not going to be able to play their normal like short squeeze game, okay? That is the thing. They are not going to be, it will not be easy for them, because all of this stuff in here, you're going to have resistance up here, resistance here. You'll have resistance through all of this mess of stuff. Go back to the other chart and have all of those other resistances, all of that place where they're going to want, where the bears are going to try and short from, okay? So the bulls need to let go, let it come down here, put in an all-time low as fast as possible, and not let it stay in oversold for 3 days. If they can do that, you have a chance to end your bear market in the secular bull market. But if they do not, right? If they insist on trying to buy every dip and let it grind down and keep your puts from like paying you, if that is how they're going to trade this, then they will let it embed, and you will have a very hard time getting it to come out next time, okay? And you can see if that happens, we can see SPY 300, we can see lower than that, we can see SPY going into the 200s, right? See it below the 340s, 330s, and stuff like that. So again, the bulls would do very well to just stop buying till you got here and then hammer it. That would be the ultimate trap for the bears. Okay. All right. That is it. Okay. Oh, I was going to show you this, by the way, really quick. One of the things I want you to see. See how we got the 18-day, you got the red candle there, and then we go over to the VIX. This is the last thing I'm going to show you, and then I'm gone. They both did it. You got to bounce off of the 18, right? And then you got to bounce a rejection of the 18 on SPY, okay? Funny how that works. It's all the same market. This one's just inverted from the other one. Okay. There we go. All right, guys, that does it for me. I'd like to thank you for checking out the Russell Journal and being with me today. Make sure you hit that like and subscribe button. The Russell Journal is written, edited, and hosted by me, Russell, and it is produced in conjunction with social media shows, and our executive producer is Maria Pureza. You guys all have a good night, and until tomorrow, pretend I said some sort of catchphrase.